Hello, hello, everyone. Welcome to another edition of Credit Conversations Q&A with me, Highly Rainey. We got low attendance today, so hopefully more folks will jump on. I know some people forget. I tried to make 6 a better time. I thought 6 would be better than 7. A lot of folks said they planning on jumping on. I don't know if they forgot, but that's okay because they can watch the replay later and get all the good, all the sauce, as they say. Okay, first I'm gonna start out by recapping the previous video that I released yesterday. I wanted to go over the student loan resolution that I developed. So that many folks who might have not seen that video, or they can get more details on it. Essentially, if you're one of the folks who have student loans and you're no longer in deferment, you received a letter earlier this year saying you were being moved into repayment. And then after you were moved into repayment, many of you said that right away you missed the first payment and they reported you 90 days late. Your credit score, I've seen people's credit scores go down as much as 100 plus points due to those 8 student loans, one for each semester that they had, get hit with a 90-day late and their credit scores plummet in that case. There's been a lot of confusion with Donald Trump and all the changes that he's trying to make at the Department of Education and the mandates that they have where they're trying to push people out of long-term deferment, and he wants to start getting people to repay the student loan debt, and because eventually he wants to do away with federal student loan programs, but he doesn't want to do away with it until they can get back as much money as they can from borrowers as possible. So what I've been done for a number of people since March, if you're someone who is suddenly been forced into repayment and you're getting these high student loan payments they're expecting, and you're getting hit with 90-day lates because you missed the first payment, here's what you can do. You can go to studentaid.gov. In the top, you will see a link that says apply for IDR. IDR stands for Income Driven Repayment Program. In that application, you want to apply for that, so that what they're going to do is it's designed to base your repayment schedule on your income. Now, one thing to note is that the program is currently suspended and is being decided in court whether it's going to continue. However, because of that, everybody that passes the first round of eligibility will automatically get a 1-year deferment while they decide this whole thing in court. That's what you're shooting for, because that way you don't have to worry about repayment yet till you find out, and then eventually it may be something a little bit more desirable than what they got going right now. Secondly, in that IDR application is also a provision where you can consolidate your loans, because I know right now it reports on credit you got 8 different loans if you had a bachelor's degree and you went your whole 4 years, and there's a loan for each semester of disbursement. And so with that, not 8 accounts, 8 chances of things are going wrong. Like in this case, 8 times people are being dinged with a 90-day. So by consolidating that loan, which you can do within that application, it serves 2 purposes. Number one, when you eventually do go into repayment, you only have to manage 1 loan instead of 8. Secondly, what has been happening is when folks who have applied for the IDR and the consolidation being granted the temporary 1-year deferment, when they consolidate those loans, they zero out all 8 of those individual student loans, And what I'm seeing happening is by being approved for the IDR, they are stripping out the 90-day. They're taking the 90-day lates back off. And folks have seen their scores rebound back to where they were before they got hit with all the 90-day lates. I have several clients, they did that, no problem. And what I found is that in early March, when they first started, when they first opened up back up the IDR applications, it was taking about a month for people to get responses. Now it's down to about 2 weeks. So I've been seeing folks apply for that. 2 weeks, they get a response. If they meet the eligibility, they get the 1-year deferment. Then on the next credit update, they're seeing those items updated to reflect the new situation. So in short, if you have student loans, you've been taken out of deferment and put into repayment, and if you missed the payment and you got hit with a 90-day late, step 1, go to studentaid.gov. Step 2, click the link at the top, apply for the income-driven repayment plan, the IDR. Fill out the application. Step 3, step 4, included in that application, request a consolidation of your student loans. The next step, wait 2 weeks, 2 to 3 weeks for a response from Federal Department of Education. If your application has met the preliminary eligibility, you will be granted the 1-year deferment, and you'll no longer be expected to repay right now. And if that's the case, the consolidation will take place. And then at that point, you want to check your updated credit report. The next cycle after that, you want to look on your credit report at those student loans. You should see the balances down to 0. You should see each one of those saying transfer to another lender. And you should see if you had assessed the 90-day late previously, you should see that 90-day late removed and all of those accounts closed and in good standing. And then you should also see a brand new student loan, which is a combination of the 8 in terms of balance. The government created student loan servicing company, AidVantage, will be the servicer on that. And so at this point, that's who you'll be paying in the future once you come out of the deferment and go into repayment status. I've seen it, like I said, I've done it with several clients. It's worked since March. They've enjoyed that. So I recommend that. You can do it yourself real easy. But if you have any additional questions about it, feel free to click the link in the chat. You can reach out to me, Haile at creditrenovatorsllc.net, an email, or if you want, you can go to the website and request a free consultation, and then we can talk more about that. You just request the consultations, book an appointment, and then we'll talk, and then I'll help you out as much as I can with that or any other credit issues. So that was the one thing I wanted to talk about today. The next thing I want to talk about, of course, is we having these credit conversations, and last week we talked about disputing. The week before we talked about personal information being updated. Now I'm going to talk a little bit more about disputing and the reasons why we dispute and how we dispute. Now, of course, we have different types of negative information on our credit that we want to get rid of to improve the look of our report and thus get a higher score. Now, the one that most people sort of tussle with is collections and charge-offs. Now, I will say there's a lot of confusion out there about what exactly is your obligation when you have an account that is in collection and or charge off status? What should you do and not do to resolve that issue? Now, I'm going to start by saying this. First of all, there's always, when it comes to collections, past due amounts, anything like that, there's always two considerations when we're trying to address these things. There is the debt, the money we actually owe, and then there's what's being reported on credit and how it needs to look in terms of us trying to improve our credit scores. So when it comes to negative accounts, collections and charge-offs, obviously it's money owed past due that's been written off, right? And when I say written off, remember, just because a company writes off a debt does not mean that you no longer owe it. Now it becomes more of a question of whether it should be on credit or not, and that's where a lot of confusion comes about. So I'm going to try to unpack this without it being too confusing. So say for instance, you got a collection, say it's $1,000, right? It's an account. Originally, it was with, say, Capital One. It was a Capital One credit card account. It got away from you. So what happened in the life of that loan is you went 30 days late, 60 days late, 90 days late. So at day 91, you have defaulted on your agreement for that credit card. You didn't make a payment. You allowed 90 days to go by since your last payment. And so therefore you're in breach of contract. They shut you down. They usually shut you down at 60 days. They freeze your limit and then they close the account usually after 90 days. So at 90 days, day 91, or some days that may be day 100, they close your account. They've already freezed your limit, so you couldn't charge anymore anyway, but they closed your account and they put you in collection. They put the account in collection status. That means customer service is not talking to you anymore. Collections is talking to you, and those folks have a slightly more, I'm going to say, aggressive tone when it comes to trying to get the money back. Now, from days 91 up to day 119, and I'm sorry, 120, you're in collection status. So you're still obligated. You still owe the money. You're still obligated. And that's your opportunity during that time to contact them and make payment arrangements. Because let's face it, this is money you owe. I'm not going to preach to people about money you owe, but there's money you owe, and this is your way to make repayment of that. And it also benefits you because if you're in honest repayment efforts with them, they won't seek to push you to charge off. They won't seek to sell your loan to a third-party collection agency. And so the idea there is if you just make payment arrangements and you've turned, like in the case of that my example, Capital One credit card, you've turned that credit card basically into an installment loan, and you're just paying back the money that you already spent, when you were charging things. So you want to do that, and then that, if nothing else, that stops your credit from getting worse. Because if they sell it off, if they charge it off, that's another negative data point on your credit. Score is going to go down more. If they sell it off to a third-party collection agency, that's going to get added to your credit eventually if you don't resolve it with them, which you could, but why bring another person into the mix? So the idea there is your last chance to make good on the debt part. And then eventually, when you start making earnest repayments, usually about 3 to 6 months after you come to your payment agreement, a lot of the banks will update your credit. And then but even if they don't do it automatically, we can request that after 3, 4, 5, 6 months of repayment on that loan, on that, not a charge, not a collection agency, but an actual account you have with the creditor that's in collection status. What we can do is we can request that they update the account, because this is with the creditor, so we're not wiping it away. We have them update the account to reflect that payment program that you set up. In other words, they'll put that in as the monthly payment. The balance will decline like it would on any other loan. But what more importantly, we want to get that status to change from collection to current. Because again, they'll treat it like a regular installment loan. So you want to get it update to current, get rid of those negative data points, and make sure there's no comments at the bottom, because all that's considered negative in that comment or notes section. And so that's a way you start to get rid of those negative data points, even though it's a closed loan, but it's still an active balance, but they'll treat it as such. And so that's a series of steps that you got to do there. Secondarily, if it is linked as a charge off, now that gets a little bit more complicated. So first of all, let me explain exactly what a charge off is. A charge off is an accounting term, and it is an accounting term used by lenders when they have accounts that are non-performing. In other words, they're not receiving the payments because people stop paying. So when you're in the lending business, think of it this way: in business, for you and you business owners out there know, when you have inventory, if you sell products and you have inventory, you're expected to make quarterly tax payments based on the value of your inventory to the IRS. And so you do that. So with lenders, their individual loans is their inventory. And the value of those loans is based on the loan amount and the interest rate and the performance of the loan. So one of the things that lenders don't like, when you get behind on your payments, you actually reduce the value of that loan. So they're already annoyed. They're not getting the money like they want to. Not only are they not getting the money they're owed, but now you're causing the value of that very thing to be reduced by not paying them. Now, it's a good news, bad news, because what they tend to do is, as the value of the loan falls, they can write it down to the IRS. But the problem is, it's a quarterly thing, and again, till you're defaulted, and you're not defaulted until 90 days. So obviously, it depending on how your overlap is, they may not be able to write off your loan until the next quarter. But more importantly, when after 90 days, you're in default, and then you got 120 days until you go beyond collections. At that point, they can say to the IRS, hey, my borrower hasn't paid on this loan in over 150 days. It is a non-performing loan. We don't want to pay taxes on it anymore because the value of this loan is falling by the day. So we want to take this off of our asset rolls as a performing loan. And the IRS says, okay, that's fine. That is what is labeled as a charge-off. So they told the IRS, we're not collecting on this loan anymore. We don't want to pay taxes on this loan anymore. We're not even going to even try to even collect on it anymore ourselves. We're going to write it off, even though when they say write off, that doesn't matter whether or not they plan to sell it to a third-party collection agency. They're writing it off. And that's what it means to charge off. It doesn't mean you've been absolved of the debt. It means that technically, though, if they discharge the debt, by rights, they should not be reporting it anymore. According to the Fair Credit Reporting Act, which governs all the rules around debt, it says that the lender can only, if the lender charges off the debt, and after they write it off and issue you a 1099 saying that, because the IRS said, fine, if we're going to allow you to write off these non-performing loans and charge them off, and you say you're going to just let the money slide, let it go, then that consumer to the IRS is a taxpayer. That taxpayer has to call that forgiven loan income. And so they're supposed to issue you a 1099 at the end of the calendar year. You receive that 1099, and then you're supposed to write off that forgiven loan like it's income. Now, most creditors are not generating 1099s because they don't want to give up the opportunity to sell that loan third party, but they can't have it both ways. So you can go after them and to get them to take that off of your credit. But the problem with that is if they take the whole account off, it could hurt your credit, because if that's one that used to be a long-standing account of yours, it could affect your credit score, because it could change your average age of your accounts. It could also change the average age of your credit history, the length of your credit history, if that happened to be one of your older accounts. So you got to kind of think long and hard about that. But again, it doesn't say that you don't owe the debt anymore. It only says that if they're going to charge it off, it should not be on credit. So understand that in many of our attempts, we're addressing things by taking them off credit. We're not talking about absolving of the debt, because they could still take you to court. They could still get a judgment. They could still garnish your wages. They could still levy your bank accounts. So again, we're not talking about the debt part. We're just talking about the credit part. But even then, it is a slow process, because they're slow to say that, because they could say, well, because like say this time of the year right now, you're asking about a charge off, something that got charged off sometime since January 1st. And they say, well, we don't issue 1099s till January of next year. So you'll have to wait till then. Well, do you really want to do that, or do you want to try to absolve it or whatever? But again, if there's a way we can get it taken off of credit, you can worry about the debt part later. But that's the challenge when you're in the middle of the calendar year and 1099 generation is months away. So that's where it gets tricky. So I often recommend, if we know this is money we owe, try to work it out, try to pay it, but do it the right way so that it can be updated on the credit. And we often do that through letters saying that we can modify it, and they agree to modify it, things of that nature. But there's a back and forth there. Now, if we're talking about a third-party collection account, this was an account that was created solely for the purpose of collection on an account that got sold to third party, and it's only a collection. The process is different. With them, this is somebody you never had a business arrangement with. You don't know them from a can of paint. And so we say, why am I even dealing with you? So with them, our approach is, first thing you want to do is send them number one, you want to send requests from this third party collection agency. So say that same Capital One is sometime later, it got sold to one of the larger credit collection agencies. Many of you have probably seen it, LVNV, and it's part of a larger company called RBC. So sometimes you'll get a letter with both of those on the same letter from the same account. With those, that's a totally different animal. So with those accounts, we are seeking to get it removed from credit. And if that's through either, well, first of all, I always do with clients, I request the original contract that they say that their collection effort is based on. Number two, a pay history. So show me where I went delinquent with them, and what does that got to do with you? And then thirdly, an assignment or other documentation that says that LVNV has the right to contact me about the debt that I used to have with Capital One. And if they can't provide all three of those things to you within 30 days, they are supposed to take that collection off your credit report. Now, again, it doesn't mean that you don't owe the debt, but it should not be on credit. And if we're talking about cleaning up our credit, that's the consideration with most. want to worry about. But I don't want to let you know that, it still can be an outstanding debt. So you still may have to deal with them taking you to court. And if you don't report to court, you answer, make repayment plans through the court, and end up paying court costs, you can end up with summary judgment. See, I know there's a lot of people out there in the credit repair space. They say, hey, we can do this to get rid of it and get it off your credit. But they sort of imply that if they got it off of credit, that you don't have to worry about it anymore. And I just want to be transparent. I work to get stuff off of credit too, but I say, hey, are you concerned about the credit part only? Or are you still concerned about the debt behind it? Because the only thing I say is, if you say my immediate attention is cleaning up my credit, I'll worry about the debt part later, but do understand that the debt part, it could end up coming back on your credit report. That's number one. Number two, it could end up in further escalation of collection efforts, including court. So a lot of people will do that, get it off their credit, and then they ignore the debt instead of resolving that, where I try to get people to do both. If you resolve the debt now and take care of the credit part, then you don't have to worry about it anymore. And that's more the line of restoration. A lot of people they think credit repair is somehow debt relief. And they think that part of it, they think getting it off your credit report equals getting the debt discharged and getting rid of. And they're not the same thing. We're just talking about the credit report. Unless we talk about negotiating repayments, making repayment of actual debt, anything being removed from the credit is just on the credit side. And that can be, a little bit more difficult. We use the credit laws if things cannot be reported. Anything that's accurate, there's no magical solution for removing, period. I mean, the laws do talk to things about privacy and talk about accuracy. So if you can get stuff removed, it's inaccurate. But if it's accurate, that's more of a challenge. We can get things removed. I just like to set that straight as far as expectation. But remember, there's a distinction between removing something from credit and discharging the debt, because the debt may still be out there. Now, when you're dealing with more escalated issues like car repossessions and things like that, we got to get a little bit more involved. Because with an automobile, we got a whole nother thing. So not only do we have a lending agreement, we also have a sales contract that says the car is collateral for the loan. We have a lending agreement that dictated the money you borrowed when you bought the car and those considerations. So if the car was repossessed, whether it was voluntary or involuntary, the important thing we need to find out there is what happened to the car when it got repossessed. Did it get resold at retail? Did it get resold at auction? And so what I always do with clients is we reach out and we get a notice of disposition. We find out what happened to the car. And so we ask the lender, what happened to the car? Send us the notice of disposition. Because the lender took the car back when we defaulted, and then they had it transferred back to them. And then it was theirs to do whatever they want. So we reach out to them and we say, hey, what is my outstanding balance on this car? Because we know we owed X amount of dollars when it got repoed. They added some fees. Now they had late fees, but those are nominal, 30, 60, 90 days, they got to add that. Then if they repossess the car, they charge a repossession fee. That could be a few $1,000s added on to your outstanding balance. And then depending on what they had to do to the car to get it ready to sell, they can actually charge you for that. If they had to clean it up, detail it, if the car was damaged, minor damage, they try to make it as best they can for sale. If they didn't, and then if they put it up for auction, there's costs involved with putting on an auction and all of that. And then that gives you a new balance minus whatever the vehicle sold for. And so once it's sold, you owe the outstanding balance. Now, what's on credit may or may not be the actual balance, outstanding balance you owe. I've seen it. A lot of it depends on how the car was repossessed, what the condition it was in, how quick or did it get sold. And sometimes the lender, because the lenders will sometimes update. A lot of lenders don't bother updating. So it's often what's on credit is what it was the balance was as far as the original loan go. It doesn't reflect any additional charges or fees. And so once you get that, now that you do that, you find out what do you actually owe. And then you can set about trying to make it right. Depending on the amount, you can say, I'll pay the difference. I know most people don't want to do that because they say, I don't want to pay on a car I don't own anymore, which is why I always suggest avoiding repossessions. There's actions you can take to do that. I'll mention that because it's in my book, 7 Ways to Beat the Repo Man. A lot of options on what to do to avoid the repossession in the first place and walk away with, you know, with owing less, owing maybe nothing, owing less, getting rid of the car, figuring out how to pay for the car, or getting rid of the car in a way that doesn't hurt your credit, it doesn't hurt your wallet. So that's another story. But that's what you want to have with that. So that's makes working on repossessions a little bit more tricky because we do that. But I will tell you this: whenever you're disputing any kind of accounts, paperwork is paperwork. If there was a weird circumstance by which you went into default, get the paperwork. If you say I paid this, but it's not reflecting on credit, pull up the paperwork. If you made payments, if something weird happened with an automobile, and sometimes people have repossessions after an accident, and somehow there was a problem with their insurance, it lapsed or something like that. Get all that paperwork together. It makes the dispute process so much smoother and easier. When people don't want to produce paperwork, everything takes twice as long, 3 times as long. It's a slower process. And then when they're paying someone like me, and I'm, what oftentimes I'll let people make monthly payments, and then they're feeling like the process is being dragged down and they're being paid month after month. And that's why I encourage them, get the documentation, take the extra effort, call the creditor, call the hospital if it's a medical bill over $500, because right now we still gotta deal with medical bills over $500 still being on credit. That was something that was supposed to be eliminated at the beginning of the year, but that got held up in Mr. Trump's legislative and policy changes. But just understand that 95% of your success, because I know for me, 95% of my success when working on somebody's credit is getting the documentation based on what the deal is, getting that stuff together. I mean, everybody who's gotten their greatest successes with me is because I said, hey, we need this paperwork. They went and got it. They were able to get it. We submitted it, and things just go along so smoothly. If you want to rely on them to seek out your justice, that's what you're gonna get. Because if you want to tell somebody, just tell them it's not right, and then tell them to investigate. And then if they take a peek and they don't see anything, they say we didn't see anything, and now it's up to you. But you can save yourself a lot of time and aggravation by getting that paperwork, if that's what really happened. Because there's no sense in faking the funk about it. So, but it's important that you do that. And then, of course, when you're disputing, you got to make sure you're detailed in what you're telling them when you say why you're disputing this. You can't just dispute an item because you don't like it, because it's negative and you want to get it off your report. If you say it's not yours, then you can prove it. If you say it's an error, you can prove it. If the amounts are wrong, we can prove it. We work to do all of those things. I mean, if there's errors, we try to get it off first, but of course, they always have the option of correcting it. But at least if they correct it, it's usually less of a negative situation. But just remember, credit repair is not debt relief. It's not. It's not. It never has been and never will be. It may be you get things off of credit, but it'll never stop you from owing anything if it's accurate. Now, if it's something that you don't really owe, you never owed it anyway. But just remember, I know people don't like to hear that. I know it's disappointing. I know it's people out there that are promising that, and they're implying that credit repair is debt relief. It's not debt relief. Debt relief is a separate company. They do a great job. And then what often happens is, but debt relief often doesn't help you with credit. The thing with credit repair can help you with debt, but debt relief can never help you with your credit. You'd have to fix your credit afterwards. Anything, bankruptcy, debt consolidation, debt negotiation, all of those are going to have a negative impact on your credit at the present moment, but no problem. You can come back from that. After you've gotten rid of all the debt, you can build new credit when the old debt is gone, wiped away, forgiven, eliminated, negotiated away. You can build new credit from there. But building credit is not the same as negative credit or removing credit or repairing credit. Those are two totally different functions, two different sets of processes. So it's important that we understand the distinction between debt and credit, debt considerations, credit considerations. So that's what that goes. Now, knowing what to say in a letter, in a dispute letter or a letter about what you want them to do is very important. You have to be very specific about what you want to do. If you say this balance is wrong on this debt, then you should say, I want you to investigate this because this balance is wrong. Now, preferably if you got documentation that says your balance should be X or Y instead of their X, you should provide that. And then they will reach out to the creditor. If you go to the credit bureau first, I usually go to the creditor first. And then I go to the credit bureau and say, hey, they're saying this is right. This is not right. I got paperwork that says, if I got documentation up front, go to the creditor first, credit bureau first, and say, look, I got documentation right here that says it's X. They're reporting this Y. Can y'all update the credit report? They will reach out to the creditor and say, hey, consumer has documentation that says balance is 12,000, not 20. What say ye? And then it's up to them to prove that it's 20 and not 12. If they can't prove it, credit bureau is going to change it to 12. If you say this is zero, it shouldn't be anything. I paid this a long time ago. Here's my proof of payment. They say, hey, consumer has paperwork that says this is paid. Show me where they still owe money. Creditor can't provide that. Credit bureau updates it. Score gets improved. So that's how you have to play it. So a lot of folks say, hey, how do I do that? How do I know what to write? How do I create a letter? Well, you got some choices out there. There's lots of people out on the internet, the various places like Etsy and whatnot. They'll sell you different dispute letters for different situations. And then all you got to do is just fill in the blanks with your information and your account. Some of those are effective, some of them are not. Of course, if you don't know what works, you don't know what you're buying. But for the most part, if it makes sense to what you're trying to say, if the letter says what you're trying to say is in terms of your situation, then it's probably okay. Be wary of those folks out there with the letters, the magic letters, the magic 609, and some of those other ones that promise. They say if you just use this letter, it'll make all your disputes go through and all your negative items go away. There is no magic. A letter needs to make sense and explain your situation. And if you got a letter that says, this is my situation, here's my documentation as to why it should be updated, that's where your greatest success comes from. It comes from you actually addressing that. So you either got to know how to write a letter or you got to know where to buy the right letter. Now, there is software out there that you can access that can help you with that. Now, of course, some of the best ones available now are AI based. And so it's going to look at things, whatever you input in, and it's going to say, oh, based on what I'm seeing here, this is what the letter should say. And it'll generate the letter saying this is what the issue is and this is what you want to do. Now, this is not the magic bullet I was talking about before, the magic 609 letter. This is just the machine, the AI, the software, looking at what you got in real time and saying, hey, man, this is what I think you should say. This is what the letter should say to help you with that. Now, if you got access to that, that's great. That goes a long way towards you being able to work on your credit yourself. So you say, how do I get something like that? Well, I got just the thing for you that can help you with that. What I have coming up, it's real soon, is a program where you buy my course with all the information that you need to know about credit, how it works, and everything. And along with that, it will allow you free access to a software platform that I had started with developer who created it. And this will allow you to fix your credit for free. Yep, for free. It doesn't. I'm not charging for that. It goes along with the course. The course fee is nominal, but it'll allow you to go in, and AI will do that. You go in, you run your credit, and you upload your credit in there. It reads all your credit accounts, and then the AI generates the letters. You say, I want to write a letter for this. AI says, boom, here's your letter. Boom, here's your letter. Boom, here's your letter for this. Here's your letter for your collection. Here's your letter for your charge off. Here's your letter for your repossession. Here's your letter for your old bankruptcy. Any of those items that shouldn't be there that you have an issue with, it generates a letter based on what you said is your issue with it. It reads and say, this is how you should do this. So you don't have to guess, you don't have to think about it. And then you just you still want to provide documentation if you got it to support your position. But this is a system that reads your credit report and creates your disputes for you. This is what I've put together. I think a lot of guys are great. I've had folks in the past where they were considering credit repair, but they had budget issues. So it was difficult for them to pay either a package fee for me to fix their credit or a monthly fee. They found it hard to be sustainable. This is an opportunity for you guys to be able to work on your credit yourself, even with the help of AI. You still got to do the work. Now, in addition to that, you also have the option of printing out the letters and stuffing envelopes. There's also another feature in there where if you want a service to create the letters for you, where they'll print it and mail it out for you, it's an additional charge, and you'll see it in the website. I'm going to share my screen and just show you what it kind of looks like. Oh, wait a minute. I can't get in there. Why am I? Okay, there we go. And I just wanted to show you, this is what a typical report looks like. And it'll give you that. You bring it in, and then you go here, and you'll be able to dispute. And here's all the negative accounts on this particular client account. This is one of my test clients that I did because we got everything up and running. We wanted to try it out on a few people. I wanted to make sure everything works right before I open it up to you guys. But basically, this is where it flags all your accounts that need letters. And this one, this guy just got this one in. And so you would do that, and this tells you here. And then what it does is it tells you who needs to get a letter, what's going on with it. And then you have a dispute reason here it gives you. If you select whatever makes sense with what you say is going on with it, and you select the right one, whether you say that, whatever the situation is, you choose that, and then you click process. I don't want to do it on this guy because it's a live one. But if you click process, then it'll spit out a letter saying basically, you're questioning the accuracy of this item. Please verify the information, so on and so on. And as you see, this one came in by default because the system knows the best strategy for disputing items. And so we always, again, like I always tell my clients, I always start with verifying the information. We always start with verifying because I never assume that anything on credit is accurate. That's why most folks who've talked to me, I question them about what's there. Say, hey, does that sound right to you? Because I'd rather trust you as the live person than the most likely inaccuracies that may exist on the credit report. And then what happens there after you send these out, you have a dispute tracker. It helps keep track of everything for you. See, this guy is new, so I haven't done round yet. So it helps you keep track. So that it'll remind you when to be looking at, and of course, you always want to be looking out for your mail. So it helps you create the letters. It helps you track everything. It can give you overall review of your credit and all of that. And the reviews here, and that's, again, no shade to Credit Karma, but it gives you a much better overview of what you got going on than that sort of generic thing that Credit Karma does. And I understand Credit Karma is free, but remember, free is you get what you pay for. And then the tracker results, and then of course there is the support and all of that. So this makes working on your own credit very, very easy. You see, this is very simple. It's not technical. I went partnered with them with something that would be easy for my people to use. And so this is this. So I think you guys will be excited about this. Give me a couple of days. I'm looking to roll this out and open it up to everybody at the beginning of the month of June. And so, and again, it'll be very nominal to get in on this. This will be for all the folks. Now, this is for the folks who want to do it themselves. Now, I am planning on having another webinar specifically for the clients here. I may consider opening this up to that too, but I've been trying to keep this forum for people who are looking to go on. So the idea is you won't get a lot of one-on-one with me, but you will have access to me at least once a month, possibly twice a month if you got questions, overall credit questions. Again, the course has a lot of information there. I want you to use that as a reference to your credit questions, but of course you can always reach out to me. But again, if this is designed for people who want to they don't have to do the thinking and all of that, but you just got to do the work of selecting your letter. Let the system select the letters for you, tell you what to do. All you got to do is print the letters. And you can either print them yourself on your own printer at home, create your envelopes and put stamps on them, mail them out, or you can use the additional service that's in there. I can't show it to you till in print mode. I'll create a tutorial for it. And the idea there is, but the idea here is this is an opportunity for you guys to work on your credit on your own in a way that matters, and you not have to pay anybody a substantial amount if you're willing to do the legwork involved. And again, follow that. But remember, the course will tell you about things like documentation. So you could use the course rather than try to follow the course and read through it. You can if you like, but use it as a reference. So if you're dealing with collections, go to the collections section. Read everything about the collections section and then follow the action step and then go in here and then it'll tell you what to do and it'll do it for you. And again, all you got to do is print the letter. So this will be rolling out in a few days. I'll have some video for it tomorrow, a couple of things just reminding you guys about it, and then I'll be able to open that up to folks. Now, if you want to know more about it, now you can register if you go there's a funnel. There'll be a promotion coming posted. I'm just waiting for my assistant to finish it up, make it look pretty for y'all, and I'll start, and she'll start posting that on social media, and you'll be able to click on the link to register for that. Or I'm sorry, you won't have to click on the link to register. You can go. You'll be able to purchase the online course, and then again, you get this free. You purchase the course, you get this free, as well as you'll be getting a copy of my book, 7 Ways to Beat the Repo Man, not the paperback, but the digital flip book. It's very nice. It's pretty. Pages flip like a regular book, but it's digital. You'll get that free. You'll get that as a bonus when you sign up once I open up the launch. So stay tuned for that. Keep in mind for that. But what I will do is, for anybody after they see this, if you click on the link and you register for the webinar, I'll give you an additional, there'll be an additional discount related to the course so all my webinar registrants will be able to get an additional discount. There'll be a coupon code that you guys will get that will knock off additional amounts on the course, and you pay for the course, get the free credit repair software access, unlimited in perpetuity. And so there's no limit to that. There's no cost to it. If you buy the course, you get unlimited access to the course and all the materials in there. And you get unlimited access to the software site, unlimited access forever, as long as you're current on your credit monitoring and everything. But because you got to have that so it can work its magic. But it's free. It's free with the purchase of the course, and it's in perpetuity at full access, and it'll be great. So if you guys register now for the webinar attendance, you will get an additional discount, and it'll be a coupon that you guys will receive. It'll go on. It's only going to go out to the emails of the people who have registered as a live webinar weekly attendee, and you'll get an additional discount. There's going to be other people who may see the replay, and that's going to invite them. If you're seeing this as a replay, I invite you to register and be be there, and you'll get the additional discount. So I have a small panel tonight, and she already indicated she didn't have any questions tonight. It was just last week was just so chock full of information that she was exhausted from all the information she learned last week. So I'm going to close it there. We're just under an hour today on this one. But again, I do invite you guys, any of you who may watch the replay, if you have any questions about disputing, if you have any questions about the new online course and the free credit repair software access, feel free to reach out to me, Hiley at Credit Renovators LLC, or go to creditrenovatorslllc.net, click an appointment. If you want to have a consultation with me, I am still offering full service credit repair for those who may be interested in that. But that's pretty much it. And be sure to check out my YouTube channel. Lots of information there, plenty of videos with additional information, including the replays there as well. So with that being said, I'm going to let you guys go. And I hope you enjoyed it and found that. And I'll talk to you next week. God bless.